got William Lee, Chief Economist, Executive Director at Milken Institute, on the show with us. William, great to have you on 18 Hours today. Thanks for your time. And William, it seems like at least one trigger is closer now, and that's the Fed meet. Seems like a 25 basis points is something that the market is anticipating, although now, the chatter is only getting louder that perhaps it could be a 50 basis points as well. What is it that you're pricing in?
Well, the markets are really waiting on edge for that long-awaited Fed rate cut. I personally would have cut last July, and I would have cut by 50 basis points. And now I think they're behind the curve because the labor market has come in much weaker than we thought. And inflation really has no signs of rearing its head in terms of the tariff-induced inflations. So, in fact, the Fed really is way behind, and I think the 50 basis point would be appropriate. Although I think it would take a bit of nerve for a lot of the members to vote for a 50 basis point cut at this point. Although they did it once before.
Indeed, William, that's been the long call by President Trump as well, that it's been quite some time that Fed has taken a rate cut. But along with that, William, the other thing that we are getting to see is the cool off in the dollar index. Just yesterday, it has slipped below that 97-odd mark. Do you believe good times for emerging markets up next, and money can make a shift from U.S. to emerging markets now?
I think the kind of money that's induced by day-to-day or week-to-week dollar movements is really a portfolio kind of a hot money flow. As far as U.S. policy is concerned and Donald Trump and the Federal Reserve is concerned, what the U.S. is really interested in is attracting longer-term investments. And that's exactly what the trade policy has been oriented toward. President Trump has said to the world, the U.S. is ready to do business. Come bring your dollars here, invest in the United States where you get the highest rates of return for your investments. And in return, you get a tariff barrier to protect you from unfair competition if you create the jobs here and produce your stuff here in the United States. So investments are the name of the game. And I think even though you say the dollar has slipped a bit, it slipped off of, say, the near-term high of February, where it was way overvalued. So I think what we're seeing now is a normalization of the dollar. And that the economy itself is doing quite well. And I think with the labor market slowing down to a more sustainable pace, things are really getting into balance. And what we need to see right now are some real trade deals. And you mentioned earlier the China trade deal. I think we're being distracted by all this talk about TikTok. TikTok will be great for our young people, great for some of the retail audience. But as far as the real prize is concerned, China is still distracting us with all sorts of obstacles to prevent Jensen Huang from selling his advanced AI chips in China. And that's where the real prize is going to be.
Well, yeah, absolutely. It's about tech and TikTok when it comes to China. It's about oil when it comes to India. But even as we speak, William, some chief negotiators from the U.S. are here in India to, negotiate on the tariffs. Does it seem like Trump eventually will get his way, be it with China or India?
I think with India, India, I think, has a very difficult position because India wants to show that it is a major player in the world. So Prime Minister Modi has really made some very strident statements about the BRICS countries cozying up to Russia and China a bit more to, I think, let the world know that India will never be a handmaiden for the United States. And I think that's very clear. But it's very much in the interest of India to arrive at deals where they open up your markets for U.S. firms, especially financial services and digital services, and also the fact that a lot of the tech in India is very complementary to the tech investments that goes on in the United States. So opening up India's markets for investments from U.S. and global investors that then promote trade between the U.S. and India will be the most ideal condition for India. And I think that's exactly the kind of terms that the negotiators are trying to arrive at, and yet maintain the appearance that India will never kowtow to the United States. And that's very understandable considering that India is the fourth largest economy in the world, and it has a very difficult position in that part of the world.
Sure does. Work in progress. But William, thanks for your time today. Good speaking with you.
Thanks for having me.
Okay, let's